Afternoon, everyone. Last class, we covered the accounting cycle where we did the adjusted trial balance. Then you should be practicing some adjustments. And in this section, you will notice that there's one we call optional end of spreadsheet right here in about step 5. That's an optional spreadsheet. We did the adjusting entries yesterday, and we will do an adjusted trial balance in class, but we're moving into most of what I call the closing entries, so you can have those definitions. You have done the financial statements in terms of your income statements, your balance sheet, your equity statement in the beginning chapters, and we're going to do a review again of that, but I want to make sure we start with some definitions on the closing entries. So we're going to talk about the closing entries, but let's review the type of adjusting entries we did. We did adjusting entries for revenue. We did adjusting entries for expenses. We did adjusting entries for assets. We did adjusting entries for liabilities. So we did adjusting entries for depreciation. So there are 5 types of adjusting entries that we did based on different accounts. Again, REAL, that's a new acronym to remember that, the different types of adjusting entries. For revenue, so expenses, for assets, for liabilities, for depreciation. And we talk a little bit about things like rent. You can prepay your rent, and then you can deduct it in adjusting entries as it becomes used up. The same thing, most of us do that for our insurance. We prepay our insurance, and then their company, whichever company is doing the insurance, they can adjust for it when it is used up. So our major deal today is to talk about what? Closing entries. And for that, you can use the acronym READ. R-E-I-D is also pronounced read. I know R-I-E-D is read, R-E-I-D is read, R-E-E-D is read, R-E-A-D is read. All of those are read, but we're focusing on what you read today, R-E-I-D. So in closing entries, what are we doing? We're closing our revenues to our income summary. And we're closing our expenses also to our income summary. Then we're closing out our income summary to our owner's capital and our drawings to our owner's capital. Now, what are closing entries? Closing entries in accounting are journal entries made at the end of an accounting period to transfer the balances from what we call temporary accounts, like revenues, expenses, gains, and losses, to permanent account, like retained earnings. Everybody got that? So all this time we've been working with the temporary guys. Now we're going to move it to permanent. Okay? So, and it is going like to the retained earnings sections in the equity section of the balance sheet. What does this process of closing entry do? It resets the temporary accounts to 0 for the start of a new period. So it makes it start all over again. Everybody got that? So when you do it in QuickBooks, when you do it in Gusto, when you do it in whatever method you're doing, what are you doing? You are resetting these accounts. So let's go over this again. What are closing entries? They are journal entries, just like we did yesterday. But this is another journal entries at the end of a period to transfer the balances from temporary accounts to permanent accounts. What are the type of accounts are we closing? We're going to close in our revenue. We're going to close our expenses. We're going to close our gains or income summary. We're going to close our losses. We're going to close our drawings. And where are we closing them to? Accounts like owner's capital, retained earnings. Everybody got that? So I want you to understand, where are we closing it to? And why do we do it? To reset it, to start it over for the next accounting period. And what is an accounting period, everyone? Yes, it is either month, year, quarterly. Month, quarterly, yearly, in order. Everybody got that? So let's go ahead, make sure we know the definitions and why do we do closing entries, so that when we come back to class, we are ready to close out our entry. So thank you for listening, and let us remember, we're going to close out read. Revenues to income, expenses to income, income summary to owner's capital, drawings to owner's capital. And what are we trying to do? Reset for the next accounting period. Thank you again, and have a superb day.